So good morning. I'm Graham Henderson, CEO of the London Chamber of Commerce. I've got a few housekeeping matters that I'll deal with, but before I do that, I want to offer some reflections on Indigenous economic reconciliation. On the advice of, we have an advisory circle that advises us and other Indigenous leaders. We have stopped doing land acknowledgements as pure land acknowledgements. Folks have probably noticed that. We think it's a good practice. We want to start focusing on economic reconciliation increasingly. So we're in the midst of an overhaul of our policies. And on our website, you will find a new economic reconciliation and relationship statement. For businesses in the audience, I would heartily recommend that you take a moment to visit the website. It's in the drop-down menu, About Us, and there you'll see it. It is a radical shift away from the type of land acknowledgements you will see and hear, and it's focused on actions, which is important now. Beyond that, we have revamped our diversity policy. Now, it's very common for diversity policies and businesses to include economic reconciliation issues in their EDI policies. Economic reconciliation, Indigenous relationships have diversity overtones, of course. These folks are people who are equity deprived, but they're also rights deprived. And so the Government of Canada, many other organizations have shifted. Effective next week, we will have an Indigenous relationships policy in addition to our diversity policy. And I see Nadia in the audience from our People and Culture Community Committee, who was responsible for helping us to draft that document. So again, you'll see that on our website next week. And I recommend for businesses to start to rethink the way you're doing your so-called acknowledgements and start thinking about focusing them around actions and economic reconciliation. So with that said, please join me in welcoming a great friend of the Chamber. I'll introduce both of our guests off the top, and then I'm going to turn it over to them. But Pierre has done more than one event for us. He's the Vice President Research and Chief Economist at BDC. Obviously, he attracts big crowds for us, which is great. And he's one of Canada's most respected economic voices. He's known for turning complex issues and global trends into clear, practical insight for businesses, which of course is what we love here at the Chamber. He leads the BDC's economic research team and regularly advises entrepreneurs and decision makers across the country on risks and opportunities. For us, this is a moment, for all of us, it's a moment of uncertainty where productivity is in question, investments in question, competitiveness, all of these issues are rising to the top of our agenda. And he brings exactly the type of informed commentary that will help us, that this conversation needs. I'm also happy to bring a first-timer for the Chamber here today, Darren Gilbert. He's the Commercial Account Director at Export Development Canada. He's a seasoned banker. He has deep expertise in international trade and finance. He has supported a wide range of globally focused clients across industries as they also navigate complexities in international markets. His practical experiences have made him a trusted advisor to Canadian exporters seeking success in an increasingly competitive global economy. And that background is also especially valuable to all of us in the room today and Canadians in general. So with that said, I've introduced them both. Now, I believe, Darren, you're going to kick us off. So I don't have anything else I need to say right at this moment. So I'm going to turn it over to you, Darren, and we're away to the races. Excellent.
Thanks, Graham. Just sound check. Everybody can hear me just fine? Excellent. So Darren Gilbert from Export Development Canada. I'm a local guy. We're based out of the office here. Actually, we don't have an office in London anymore. I work out of my house in Dorchester, but very happy to be here. So thanks you very much. I was actually really really glad to hear about some of the changes that you're doing with the land acknowledgements and other areas there. I was at an Arctic summit last month, and one of the things I took away is that the Indigenous groups don't want compensation. They want to be stakeholders in a lot of our projects that we're doing here in Canada. So I'm trying to keep that in mind when I'm speaking with local business groups and industry associations, just to share that message that I learned. So anyway, here to talk a bit about EDC and how we're supporting Canadian exporters. I know everybody is here to hear Pierre speak, so I'm going to keep it short. I actually just learned that Pierre is a Canadiens fan after a tough game last night. Please be easy on him. He's probably having a tough one today. And I'm trying to see is just a show of hands. Out of curiosity, I always like to ask this question: who in the room knows who Export Development Credit is? That's pretty good. I normally don't get that many hands. EDC is probably the smaller crown cousin of BDC. We're a much smaller organization, so a lot of companies don't know who we are. So just as a high level, EDC's been Canada's export credit agency for over 80 years. We've got more than 40 offices spread across the globe. About half of those are in Canada. And we support direct exporters, indirect exporters, and future exporters. Those are really the three buckets that we can help with. So direct exporters are pretty simple. Your customers are companies that are outside of Canada. Indirect exporters are companies that support a supply chain, and I'll give you a couple of examples. So food and beverage. A lot of what's grown or manufactured in Ontario does not stay in Ontario, and it might go to a secondary manufacturing facility and then ultimately leaves. Or tooling when it comes to automotive. Tooling companies might support a stamping company, and then the parts from that stamping company goes onto a vehicle, which ultimately leaves Canada. So lots of deep indirect exporters we support. And then future exporters are customers that may not currently export, but are looking to spread their wings and sell their goods to other countries. So just a couple of data points. We survey our customers every year, and one of the things we ask them are what's causing you headwinds, what's causing you headaches? And a lot of these can be grouped into similar categories, but profitability, rising interest or rising business expenses, and what I'll say are tariffs are really the main ones that are driving the concerns with our companies that we're dealing with. Tariffs are obviously a major one right now. Not a lot of influence that individual Canadian companies can have on tariffs. So really, we are just a passenger along. And then on tariffs, since Liberation Day, and I see this is being recorded, so I'll choose my words carefully. Since Liberation Day, Canadian exports to the States have dropped dramatically, so 4%. And we'll put that in perspective when it comes to dollar figures. That's about 30 billion with a B of Canadian exports that are no longer being shipped to the States. On the flip side to that, though, our Canadian exports globally have increased, and this is net of any energy exports like oil. So Canadian exports globally have increased 20 billion, again with a B, so have shrunk that delta a little bit. And where are Canadian companies looking to export? So living beside the largest economy in the world has been a great benefit to Canadian exporters. However, right now with the trade disputes that we're having with the States, Canadian exporters are looking for other areas to go. And Europe is their number one market for multiple different reasons. That market is very similar to the North American market. There's less language barriers there. The laws and customs are very similar to Canada and North America. So a lot of our companies are looking to export to Europe first. The Asian Pacific, which also includes Australia and New Zealand, second. EDC is recently opening up an office in Australia. So we're seeing that as an opportunity for growth. And then how does EDC support Canadian exporters? We really have 4 financial products. We help Canadians find financing through their banks. We have a loan guarantee program where we can share the risk with the banks and help expand their risk appetite. We have a bonding solution. So if you're using letters of credit for suppliers or performance bonds, leasing bonds, there's a whole bunch of reasons to have a letter of credit outstanding. We can provide the security backstop. We have accounts receivable insurance, which is a great risk mitigator. If you are entering new markets and you find new buyers that want to buy your product, but they're asking for 90-day trade terms, you might not know them, so you're concerned about being paid. we can offset the risk of that by layering on an insurance product. And then finally, if you're looking for a new market to expand into, maybe production, EDC has a direct financing program where we can finance your wholly owned sub outside of Canada directly. We have our knowledge product, and if you haven't been on edc.ca before, I invite you to go on. There's a whole bunch of information on there as far as different markets. And if you log in for a MyEDC account, there's additional information on there that can help you navigate some of the tariffs. And then finally, and I'll talk about this a little bit further down, is our connections program. So EDC has strategic relationships with large multinational companies. We might be in their syndicated loan agreement. And one of the things that gets us is access to their buying group. So a lot of times these companies will come to EDC and say, we are looking to source a North American supplier for this type of product. Do you have anybody within EDC's portfolio that you can introduce us to? One of the areas that we're making great strides in that is food and beverage. So if you happen to be a food and beverage manufacturer and you can do white label work, we have made quite a few connections in that. So this is just a bit of high level as what's on edc.ca. So I talked about market information, trade insights. We host a number of events. We have an event center in Kitchener, which we run, I think, monthly content at. If you're interested in attending one of those events, don't hesitate to reach out and I'll get you on the email list. And then we've got access to our financial crown, which includes BDC, FCC, CCC, and the Trade Commissioner Service. If you haven't met with the Trade Commissioner officer in London, his name is Taylor Bentley. Happy to make that introduction. And then I mentioned about our connections program, but one of the things I want to stress on that is when it comes to Canadian technology, we have been engaged by large multinational corporations, and I'll give B&W as an example. They came to Canada on a trade mission looking for the next level tech for connected car, and EDC was able to get them in front of a number of tech companies within Canada that are working on that next solution. So they were really interested. Advanced manufacturing, Canada's tooling industry is world class. Every part on every vehicle that you ever see needs to have a tool to ultimately make that. And as new production for vehicles starts to be announced, our toolers are the ones that are going to make those tools. So we're happy to make those connections as well. Happy to be your conduit into EDC. I look after the mid-market space, which are companies with sales between 10 million and $1 billion. That's a large space, but we have a large national accounts group that looks after companies north of $1 billion, and a small business group that are under $10 billion. But happy to be that conduit in if you fill into one of those other two areas. The other thing I'll say is from time to time, like I mentioned, we do a lot of content. We've got a defense and security show coming up in June. If you happen to support that industry or you're looking to get into that industry, we're hosting an event in Kitchener, June 24th, I believe. I think we're doing questions after,
Yes,
but yeah, happy to pass it off to Pierre.
Thank you, Darren. Good morning, everybody. I'm just going to switch to... Okay, so presentation will be up in a second. This morning, I'm going to talk about two parts about the economy. The first one is about what we should expect this year as an economic outlook for 2026. And the second part, I want to talk about more the long term, the next 5 to 10 years. So I'm going to talk about 3 structural changes that are going to change our economy. But before I do that, let me ask you, raise your hand if you believe we're going into a recession in 2026. Who believes we're going? Oh, some people. From EDC, I'm surprised. I'll talk to your chief economist. And so this is a pretty optimistic group. I agree. I'm going to try to show you the economy is going to be slow because of the tariff, and Darren talked about that. but we should be okay. I think we'll have positive growth for 2026, and I'm going to explain why we believe that. So let's start with this year. The story is still the tariff, even though they were imposed a year ago, but they're still having an impact on our economy. Just like in Ontario, for example, our export of steel is down by 30%. Our export in the automotive sector is down by 7%. And if we took lumber, it's down by 12%. Aluminum is down by 5%. So there's no doubt that the tariff is having a negative impact on some sectors of our economy. So we don't export as much. As a result, we don't produce as much. This is the number of jobs in manufacturing in Ontario. And as you can see, since the introduction of the tariff, the number of jobs has been declining. We have lost about 30,000 jobs. But the good news is the rest of the economy, which is presented from the other line, continue to grow. So the negative impact of the tariff was limited to some sectors of the economy. Not all sectors were affected. And actually, the overall economy continued to grow. So in 2025, we had positive growth for the Ontario economy, 1.3% growth. But as you can see from the graph, which present the quarterly level of GDP, was quite a ride. It was a wide ride. You know, we had a lot of turnaround during the year. So the second quarter was negative, and the fourth quarter was negative. But the economy at the end of the year was resilient. So despite the uncertainty, despite the tariff, the Ontario economy managed to have positive growth in 2025. So what should we expect for this year? Well, there's three factors we're watching. The first one, and I believe the most important one for the Canadian economy, is the renegotiation of CUSMA. Right now, 86% of our export to the US is under the agreement. So there's no tariff on those. So that's a large part of it. But of course, the 14% is hurting some sectors of the economy. So the goal of the government of Canada is to negotiate a new free trade agreement with no tariff. So it's too early to know what will happen. I think as an economist, and I'm not like at the negotiation table, but as an economist, I believe we will have a deal. And the reason is this free trade agreement is beneficial for the three countries, actually, but Canada and the US specifically. We are the second biggest client of the US economy. We buy every year for $450 billion. So this is an important deal for the US, even if we don't hear that from Washington. So that's why I believe we will have a deal at the end of the day. The question for me is, are we going to have tariff or not? We know the US administration, they like tariff, they like the revenue coming from the tariff. It's about $400 billion a year. And they also like to protect some of their sectors. So I'm not sure if we will have a free trade without tariff. We might have some tariff at the end of the day, but we'll see during the summer. But that's the first thing we're watching for that will have a huge impact on the economy this year. The second factor we're watching for, it's more recent, is the price of oil. And as you know, there's a war in Iran, which really increased the oil price. But the graph is showing you that this is not the first oil crisis that we had. Like over the last 40 years, we can see that, we had many of those. And the point I want to make here, none of those has created a recession in Canada. So, of course, it's painful when the oil price is increasing. We all pay more for gasoline, and that's the first impact that we see. We see an impact on consumption. But in Canada, we also produce oil. So when the oil price is increasing, we benefit from that as well. Of course, it depends where you're located in Canada. If you are in Ontario, in Quebec or Manitoba, you just see the negative side of it. If you are in Alberta, Newfoundland, and even Saskatchewan, you see both sides of it. The net for Canada is actually positive. When the oil price is increasing, actually Canada benefit from that. Some businesses, governments, like the Canadian government is benefiting from that. But at the same time, if the oil price is elevated for too long, it could have a negative impact on the Canadian economy. So let's say we have an elevated oil price for a year. Well, that will have an impact on consumption. We don't expect that, but obviously that's something we're watching for to see how the economy is going to perform this year. The third factor we're watching, this one is positive, finally, is interest rate. As you know, interest rates have been really fluctuating over the last 5 years. They have been coming down in 2025. So now the policy rate is 2.25%, which is relatively low. And we believe the Bank of Canada will keep interest rates stable for 2026. Inflation is now under control. It's 1.8%. And actually, there's a new number this week. In March was 2.4% because of the oil price that is increasing. But you can see that between 1.8, 2.4 is not a major increase. Not enough for the Bank of Canada to increase interest rate. And also, they will increase interest rate if they believe the economy is overeating. So when inflation is increasing because the oil price is increasing, this is not a good reason to increase interest rate. So we believe the Bank of Canada will keep interest rate at the same level for 2026, which is a good news for consumer, and it's a good news for business as well. Much easier to forecast or to invest when you have a good idea where interest rates are going. So those three factors are going to shape the Canadian economy for this year. So what does it mean for the economy? Well, it means that the source of growth for the economy is going to be limited. It's not going to come from our export because of the renegotiation of the free trade agreement, because of the tariff. We continue to export, but these exports are not going to increase. Second is business investment has been flat in 2025, and that's what we see for 2026. Still a lot of uncertainty, and the fact that we are renegotiating the free trade agreement, this is not going to help for business investment. What is going to drive the economy is consumption. That's what drove the economy last year. Consumption increased despite the uncertainty. As you can see in Ontario, consumption increased by more than 2% last year. It slowed down at the beginning of the year because of the tariff, but after that, people got more confident about the economy and they continue to buy products and services, and that drove the economy. We believe it's going to be the case this year as well. What makes us optimistic is this graph. The disposable income in Ontario is increasing. Disposable income is all the revenue that people are getting from salary, from pension, for the stock market, from investment, even from government program, minus the tax that we pay. That's why we call it the disposable income. That's the money we have in our pocket to spend, that we decide that we're going to go to restaurants or we're going to buy clothing or something. So this disposable income is increasing in Ontario. Salaries are increasing. The job market is a bit soft, but it's still good. So we believe consumption in 2026 will drive the economy. This is 2/3 of the economy, so this is important. Another factor that will help is government. This is government spending in Ontario, and it's increasing. So we can agree or disagree with that. And at the beginning of this week, the first conference I gave, I was with a minister from the Ontario government, so I didn't say that, but we can agree or disagree. I said this is positive. This is actually positive. If you're an economist, when government is spending more, this is good. This is positive because it makes the economy running. And on top of it, the last budget reduced taxes on small business and also on business who are investing, which is positive. And in the previous budget, the Ontario government accelerated the infrastructure program, which is helping the economy. So if we put all this together, that give us a forecast of 0.7% for this year. So this is modest, but this is positive. No recession. Growth is going to come from consumer and also a little bit from the government side, while we're waiting to see our export to start to increase again and our business investment to start to increase again. So basically, the limitation is on the trade side. That's the reason why we don't have 2% growth, for example. The potential growth of the economy is around 2%. So we are below that. There's no doubt about that. But we are in a positive zone. For Canada, I didn't talk about Canada. If you have any question, I would be happy to do that in the question period. But our forecast is 1%. The story is the same. What is limiting the growth for the Canadian economy is the tariff and the renegotiation of the free trade agreement. So the story is the same than the one in Ontario. The tariff is having a negative impact across the country. So the second part of the presentation, I want to talk about more the long term. So as you know, the economy is changing all the time. We see that with the oil price, for example, or the stock market is changing. But there's some structural changes that are more deep, and they have the potential to change the path of an economy. Remember when we signed for the first time the free trade agreement with the US in 1988? That really changed the game for Canada. We started to export much more. Internet in the 90s, that changed the way we're doing business. We're selling online now, which was not the case before. Even before the pandemic, we didn't sell too much online, but now it's about 20% of every retail sale that is made online. So technology has the power to change the game. So there's three structural changes that are going to have a huge impact in the next 5 to 10 years, and I'm going to quickly go over that. The first one is the new world order. We know that the world is different now. Much more uncertainty around the world. More wars, and we see that in Ukraine, in the Middle East, something that it's more than before. Allies like Canada and the NATO countries has been asked to spend much more in defense, and I'm going to come back to that. And finally, the US is moving away from their free trade agreement. We saw that in Canada, but we're not unique. They have imposed tariff on 90 different countries around the world. So we are having really a new world order. For Canada, it means that our export to the US has been declining, like Darren said, and also we are trying to diversify to other countries. And Darren had a very interesting graph showing that we are starting to export more to other parts of the world. So this is the first major change that we're going to see, and we believe it's going to stay with us for quite a long time. The second really is the population shift. And this one, I want to talk about this one because I don't think we talk enough about this one. There's a major demographic shift in Canada that is about to happen. The numbers I show you is for Ontario, but the numbers for Canada are very similar. This is the working age population growth. In the last 5 years, the working age population has increased by almost 1 million. In the next 5 years, it's going to decline by 100,000. Huge difference. Two reasons for that. First is, we have an aging population. So a lot of people are retiring. There was always people retiring, but now people are retiring like twice as much or even 3 times as much. So the baby boomers are close to 65 or even over 65. And in the next 5 years, they're going to leave the job market to retire. Second, the Canadian government has changed immigration policy in 3 different ways. They have reduced the number of immigrants. They have reduced drastically the number of visas for temporary workers. A lot of businesses are affected by that. And they have reduced the number of foreign student visas. So these are having an impact on the growth of the population and the growth of the working age population. This will have an impact on consumption, on housing, but also on the job market. And I'm going to come back to talk about that. And finally, the last one is AI. We're not sure yet how AI is going to change our way of doing business, but all experts are saying that this is going to be a major change. What we understand is 80% of mid-sized firms are investing in AI. Only 20% of smaller firms are doing it right now. The good news is businesses who are investing, they see the difference. They see the benefits of AI. For example, they see the benefits in terms of their efficiency, their client experience. They use it to forecast as a tool to run their business. Give you an example. We have a client, it's a grocery store. They use a software to predict how much fruit and vegetable they're going to sell every day. They reduce their waste by 20%. So this is not a tech company. This is not a big company. So you can see that AI can be used by all kinds of businesses. So we're not sure to which extent this AI will change the way we're doing business, but we understand this is going to be a disruptive technology. This is a major opportunity as well. So what does it mean for business? Well, first, it means that the job market is going to be much more tight. So it means that we'll have to look at the job market in a different way. We have to grow our business in a different way. There's not going to be a lot of people around to hire. And also, businesses will feel the pressure on salary. It's already the case. Salaries in Ontario, the average salary has increased by 4% in the last 12 months, which is huge in the context where the economy has been slow. So this is where we're going. So in terms of being successful, business will have to invest differently to make sure they can grow their business without a lot of people around. Second is we believe AI is going to transform our economy. Third, the uncertainty that we have, we believe is going to remain with us. The new world order means more uncertainty, more conflict, more geopolitical tensions, and probably not the same access to the US market. We'll see with the renegotiation of the free trade agreement, but we might have some tariff that will limit our access. That means that the diversification that we're doing, we will have continue to do that. These changes also mean opportunities, and I'm going to conclude the presentation on the opportunity side. So we already talked about defense, and as you know, the NATO countries, including Canada, have been asked to spend more money in defense. That's exactly what Canada wants to do. So the graphic that you see is actually the real numbers from the Canadian government. They have committed themselves to spend much more in the next 5 to 10 years. So they're going to double the amount that we used to spend. More importantly for me is they want to spend this money in Canada. When they used to spend about $20 billion every year, 75% of the goods they bought came from outside the country because they didn't even look at where they were buying it. Now they want to build a Canadian supply chain in defense. So this is going to be important because it means opportunities for businesses. I know London is a center for the defense industry. We have a lot of businesses related to that. BDC, EDC, we're working hard to help businesses to grow, to scale up, or to pivot if you're not in the defense sector. So there's a lot of opportunities that is coming. On top of it, and Ontario is really well positioned to take advantage of that because Ontario, in the last year we have the data, 45% of all the military spending has been made in Ontario. One of the reasons is the manufacturing sector is very strong, and there's a lot of equipment, a lot of parts in military. On top of the military or the defense, there's a number of projects that are coming in Canada because the Canadian government wants to transform the economy. So they're focusing on 12 projects across the country. In Ontario is the nuclear small generator that they are pushing for. But there's projects like this in every province. Some of them are in mining, some of them are in infrastructure. But the total of these projects represent about $700 billion. We look at which sector are going to benefit the most, and we can see that construction is actually the sector that is going to be the benefit the most, because in all these projects, including military, there's a lot of construction. Second, mining is going to have a huge impact, and mining is already flourishing right now. And third, manufacturing. We believe that these projects has the potential to increase manufacturing by 6% in Canada, which is huge in the context that the manufacturing sector actually declined last year. If we look more, we have a detailed supply chain, and we can know exactly which subsectors are going to benefit from the defense industry and also the major projects. So you can see a lot of subsectors in manufacturing are going to benefit from that. So in conclusion, there's no doubt that the tariff had an impact on the economy, but the economy has been resilient. We had positive growth in 2025. We believe we'll have positive growth this year as well, but growth is going to be limited. So the negotiation is something to watch for. Also the war in Iran, because it does have an impact on the oil price. So we believe we are going to have a slow growth, but a positive growth for this year. But also, we are very optimistic about the next 5 to 10 years because the transformation of the Canadian economy will lead to opportunities for businesses in defense, but also in also major projects that we are seeing that are going to start in 2026. So I'm going to stop here, but I want to, if you have any information, you can scan this QR and you will be directed to BDC website. And if you want to have information, for example, on what we do, if you want to have talk to somebody about a loan or advisory services, or in defense, we have a specific department now about defense. We can help businesses to grow or to pivot to the defense industry. Don't hesitate to use the QR code, or we have an office in London as well. So let me stop here, and then we have time for questions. Thank you.
Yeah, my name is Victor Ibuanose from Pillar Nonprofit Network. I appreciate that you spoke extensively about the economic disruptions that we are facing, from the tariffs to the war in Iran and other countries as well. And of course, that might be driving the change in spending to defense. But on the flip side, we also see the government decreasing funding for key community programs. For example, 2 weeks ago, we heard that government is decreasing funding for StatScan. It's a 15% cut, and they're gonna discontinue the Canadian Survey of Business Conditions. So this survey gives us a clear picture of what the business looks like. So they do it quarterly. So it's important for us in the nonprofit sector as well. We are captured in that. So together with decrease in funding for example, immigration programs or organizations serving immigration, and even for indigenous programs as well. So in your view, so we see that the increase in defense spending is being taken from somewhere. It's not like it's an extra money or surplus that we're taking it, essentially taking it from somewhere and investing it elsewhere. So in your view, what do you advise the government? Is it the right time, given the loss of jobs? So we heard recently that London is number one in terms of job losses in all the Canadian cities compared. So that's scaring a little bit. We know it's in the manufacturing sector. So what would be your advice for the government? Is it okay to take money from somewhere to actually spend somewhere else? So given the impact.
First of all, I'm not in the Canadian government or the Ontario government, so I cannot. I don't make those choices. But 2 points: Canada was forced to invest in defense. It's not like they have decided that we'd like to have to spend more money in defense. Historically, Canada has not spent a lot of money, but the NATO countries were forced, and Canada is not the only one. France, Germany, UK, all the NATO countries are obliged to spend more money. So Canada is doing it. It doesn't mean. Second point is so. If you have to, you have to. It doesn't mean that you take money from other programs. So it's a choice that government made, and this is so the Canadian government made their own choice every year, just like other governments. So I'm not going to debate that. But on the defense side, I would say that we didn't have a choice. We just have the world order change, and this to defend our sovereignty and to defend to be able to continue to protect our borders, in Canadian and our economy, we have to invest more in defense now that we used to.
Thank you. Great presentation. I always come to see your presentation because it brings a lot of insights. And I always like to share that with my managers as well. We talk about the war and the oil. I know it's hard to predict, but in your opinion, once the war is over or stable, whatever you want to call it, how long until the oil price goes back to normal?
Probably it would be a question of weeks, probably like something like 2 months. There's reasons why I believe that. The first one is before the war started, we had an oversupply of oil. So we started from a good position, if I can say so. It's never a good position to start a war, but there was a lot of capacity around the world. So that will help to rebalance the market. Second is they have been very careful not to destroy capacity. So although they destroy a lot in the Iran, they didn't destroy the oil capacity in Iran or in other parts. Iran didn't destroy much the oil production capacity in the Middle East. So when the war is over, basically, I think the market will rebalance pretty quickly. Probably it's a question of weeks because they have been careful not to destroy capacity. That's something we're watching for because despite the fact, the transportation is one thing, but if you destroy capacity, it takes much longer time to rebalance the market. So we should be able to do it pretty quickly.
I'm Nadia from the Residence Inn Hotel by Marriott. Thanks. From your perspective, what is the outlook for the travel and hospitality sector in 2026?
We believe it's going to be quite good. In 2025, the industry had quite a positive year because Canadians decided to travel more in Canada. The number of trips to the US dropped by 30%. And not all of these trips stay in Canada. Some people went to the Bahamas, for example, but we saw a strong increase in tourism in Canada across the country. And the data we have is the same in 2026. People are still, not looking to the US. They want to spend their money in Canada. And we are expecting to have a strong year in tourism in 2026.
I just wanted to ask a question. I'm sure that you would have come across 1,500 times already. You talked in the presentation, it was like, yes, AI is going to boost and all around that. My perception, and I guess to the million of layman population, it's like job losses and AI is kind of going hand in hand. My question to you is, do you think that, or there should be something to making people and our population, working population, prepared for the change coming? So that, or what's the efforts around that? For an example, Tim Hortons, they're kiosks, so there are just 2 people working where there were 6 people. So is there any effort, or should there be any effort in government's radar to educate and get our population prepared for the change coming? Because we know that, for an example, a job was done by 6 people. Again, any industry you can name it can be done by a simple software. So my question is around, do you think we should be prepared, or we should be preparing our population? Because yes, we're sitting on the jobs, but those non-skilled jobs and stuff are going to be taken. So what are we doing around that? Or should we be coming for programs that, okay, you can prepare yourself to be educated and skilled so that you can come go hand in hand with the change coming in the future in the economy, because it's coming and everyone can see that.
Great question. We're not sure yet how AI is going to transform the job market. We're looking at the data, and in Canada, we haven't seen any sign yet. In the US, we're starting to see it in one sector, is the tech sector. The tech industry is growing like this, but the number of jobs is plateauing. So this is the first sign that we see that AI seems to have an impact on the job market. I'm not too concerned for Canada for a number of things. First, we don't have a lot of workers. If you look for the next 10 years, because of the aging population, a lot of Canadians are leaving the job market. So it's actually, Canada is well positioned to have technology because we don't have a growing population compared to other countries. Second is, if you look back, when the digital revolution happened, remember, some experts said that everybody would be replaced by technology. That was 20 years ago. That didn't happen. So what we saw in our research is businesses who are using technology, they grow faster than others, and they keep their employees. They might not create as many employees, but they keep growing because they are more competitive. So technology doesn't really kill jobs. Technology protects businesses, make them more competitive. And to tell you a real story, it's a business in Ontario. Last year, we like economists, we love productivity because it's a great concept. Nobody understands it, but we like to talk about it. But last year, we wanted to be more practical. So we look at 7 Canadian businesses. It's on our website. It's productivity report. We look at how they have improved their efficiency and how they did it. So we look at the practical way of productivity. And its first thing is they did it in many different ways. Sometimes they adopt technology. Sometimes they adopt automation. There's one company who didn't do any of that. They just reorganized the work. So there's many ways to become more efficient. But this company, they produce lenses, like the way we both wear glasses. They are in Ontario. They used to produce 100 of them every day, and it was made by hand. They bought a robot, and the robot now is making the lenses. They produce 400 of them per day. So 4 times what they used to. They didn't lay off any people because they're growing. They have more revenue. They have more clients. So the tasks of these people have changed. Now they are actually basically working on the maintenance of the robot, and they're checking the quality of everything. But my point is they are growing despite with technology. This case is not AI, but it's a robot. And this is the future for Canada because salaries are increasing, because there's not a lot of manpower. So finally, to your point, we need to help people to be agile, to understand how to use technology, to work with technology. In my mind, technology doesn't replace people, but it does replace tasks. It means that what we are doing will change over time. And it means that people have to be able to adjust to that. So do we need government programs to do that? Maybe. But everybody has to adjust to this new reality that's using, for example, AI. I use AI now. When I prepare a speech or my post on LinkedIn, I use AI to make it easier. Actually, it saves me time. So that's in my job. But everybody has a different job and can use probably AI to help them. But it doesn't, hopefully next year, it's going to be me, not the robot, talking to you. Maybe in 10 years, it will be a robot. But my point is, we shouldn't be afraid. I think we just like we did with digital technology. We embrace it, makes our life easier. AI would be the same.
Jerry Pearl, City Councillor and small business owner in London. Pierre, you mentioned about the tech sector that it currently plateaued, but the tech sector is under grow or has been past years in London. And Oracle a couple of weeks ago announced 30,000 people laid off, 18%, which is 18% of their workforce. And they are investing all that money into the artificial intelligence. And you said to Canada that it's plateaued, but how do you see the tech sector kind of for Canada based on this information? And if you look at the US, it's kind of seems like they're going to unfortunately follow the Oracle's footsteps.
Yeah, the sector has been growing in Canada for the last 10 years faster than the economy. And that's what we expect for the next 10 years. Because all this transformation that we're having has a tech component, even the defense industry. A lot of these investment is going to be in tech. Anything you do now has a tech component. So the sectors will continue to grow. Maybe the number of jobs is not going to grow at the same pace than it did in the past. Like in the past, in the US, what we saw, like the revenue of the tech sector has been increasing like this. And up to a year ago, the number of jobs was increasing exactly the same trend, strong correlation. Now we're seeing that despite the fact that revenue are increasing, the number of jobs are not increasing as fast. So that's probably what we're going to see in Canada as well. But I think the tech industry will continue to grow, probably not hiring as much as in the past because they're using AI for coding. Having said all that, when we talk to tech experts, a lot of people believe that all these layoffs that we hear from the large companies, they are real, but at the same time, they are also for investors saying, yes, we invest billions of dollars in AI, and look, we're saving money. So there's some, it doesn't mean that it's 100% related to AI. It might be related to other issue that they had, and they took advantage of the AI situation to lay off more people. So it's not clear yet if it's all replaced by technology.
Rob Aitken from Music Central Entertainment. Reliance on heavy metals. I know China obviously is a big exporter of heavy metals and a large component of that. But as far as Canada, where do we find? Because I know that's a big part of our manufacturing. So if you could kind of divulge that.
You mean what you would like to buy in Canada?
Our reliance on heavy metals. Are we increasing our mining capability of heavy metals?
Yeah. The mining sector is really growing right now, and it's the demand for minerals has been increasing, and also with this transformation that we believe that critical minerals are going to be asked. So this is a sector that there's a lot of investment, and the Canadian government tried to accelerate the development of the mining. So there's a lot of certification, a lot of permits you need, but they try to overcome that to really accelerate, because there's a competition around the world. We're not the only one who have minerals that we can develop. So, and it's developing very quickly around the world. So the game is to do it faster than others. So it's growing. It's one of the sectors that we believe is going to really grow in the next decade. And I was visiting a company in Thunder Bay recently, and the north part of Ontario is really growing because of that. And what is interesting is they don't have enough workers related to what we were talking before. Nobody wants to work in the mine, and Thunder Bay is far away, and if you have been, it's a bit cold. So they don't have enough workers. So what they are developing now is they use trucks without drivers, and their goal in the 2 to 5 years horizon is they will be able to operate the mine without a single person underground. So there's a lot of benefits to that. First of all, they don't have enough workers. Second is the risk. As you may imagine, the risk of working underground in the mine is very elevated. So if you are able to operate a mine without people underground, of course, there's people, that's managing that overground. But this is a big reduction of the risk in the mining. So this is really where we're going.
Thank you, Pierre. Thank you, Darren. I just want to say every time you come, Pierre, we get so much great information, and I personally benefited from it today. I'm sure other folks in the audience have. We always love it when BDC does attend and do something. And of course, we've got our friends Mike and others in the audience from BDC great partners, great supporters, great sponsors of so much that we do. So thank you for your remarks today, Darren. Great to see EDC here. Very much hoping that we can give you more of a platform in the community. I think a lot of what we saw today is really hands-on examples, things that you can do for local businesses. So here's to you and EDC and what you can do for our local businesses. One last question to Pierre, like what does the BDC have to say about the prospects for the Habs?
We'll rebound next game. We'll be
Okay. All right. I just thought you might be a chart or something. Anyway, thank you, everybody.